It's Friday, the 29th of January 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. Today's headlines. It isn't quite carnage, but there's plenty of nervousness in the stock market, both in Australia and overseas. That's our main story. Plus, the competition regulator takes on Google. Federal opposition leader Anthony Albanese reshuffles his front bench. And will the workplace ever get back to normal? The Australian share market sold off heavily yesterday, recording the biggest drop since September last year. While the immediate trigger was the sell-off on Wall Street on Wednesday night, some analysts are starting to worry about the frothiness in the market. The S&P/ASX 200 closed down 1.9% to 6,650 points, back to where it was 3 weeks ago. $41 billion was wiped off the market during yesterday's trading. The largest 25 stocks all fell. Tech stocks were hit hardest, with Afterpay and Xero down more than 6%. The S&P/ASX All Technology Index fell more than 4%. Wall Street on Wednesday night sold off sharply, down 2.5%, even though some of the biggest names on the street, Apple, Tesla, Facebook, reported better than forecast earnings. Asian markets also struggled yesterday. Japan's Nikkei fell 1.5%, its biggest fall since October. The Hang Seng in Hong Kong was off 2.5%, and the Shanghai index was down almost 2%. What's gripping many investors at the moment is the idea that less than quality companies have run too hard, particularly among technology stocks. Future Fund Chair Peter Costello said as much on Wednesday when he commented that some tech stocks were overvalued, and when sophisticated investors decided to sort out the wheat from the chaff, retail investors would suffer. The ASX still hasn't returned to its record levels of February last year, and while the market is up substantially, 46%, from its bottom in March, yesterday's fall has taken the wind out of the rally. Trading in the next few months will be problematic. It won't be for the faint-hearted. In overseas news, Pfizer has warned that export restrictions on its vaccine by the European Union could disrupt global supply, including the 10 million doses earmarked for Australia. Pfizer said it may shift its manufacturing to the US to overcome the restrictions. The world's biggest company, Apple, reported surging quarterly sales and profits, beating expectations. New 5G phones drove revenue, including a 57% jump in China sales. It also posted strong sales of Mac laptops and iPads. Locally, the competition watchdog has released its draft report into the advertising market, and it wants it to become more competitive and less dominated by Google. The problem, according to the Australian Competition and Consumer Commission Chair Rod Sims, is that Google is massively dominant across the whole ad tech supply chain. It sells the ads, collects the data, and is the only organisation that can judge itself and its performance. The report comes after Google threatened to withdraw its ubiquitous search engine product from Australia if a bill designed to force it and Facebook to pay news publishers for content proceeds. Gold stocks hit a 9-month low yesterday, with the S&P/ASX All Ordinaries Gold Index down more than 3%. While the price of gold is down around 11% from its highs last August, many gold stocks have fallen much further. In fact, the gold index is down 25%. Why? Because the attractiveness of gold as a safe haven asset has diminished as global economic activity has picked up. In politics, federal Labor leader Anthony Albanese reshuffled his front bench yesterday, moving Shadow Environment Minister Mark Butler and giving the job to former Treasurer Chris Bowen. Tanya Plibersek lost the skills and training part of her portfolio and is left with education. Mr. Albanese has a big job in front of him to win the next election. There's plenty of media speculation that he could also face a test from within his own party. Will the workplace ever get back to normal? No, according to Telstra Chief Executive Andy Penn. Speaking yesterday, Mr. Penn said Telstra was moving towards a location-agnostic position for its office and contact centre workers. He said how work was done, how travel occurred, and how people lived will change, and it's better for the business community to accept that. While work from home was here to stay, Mr. Penn said there needed to be a better understanding of the challenges involved in the shift. Wall Street's incredible night on Wednesday has caught up a local company. In the US, retail investors, fueled by a post on a stock forum on Reddit, which said hedge funds that had been shorting stocks had to bail to cover losses, piled in, pushing many of those stocks much higher. That meant the hedge funds had even more incentive to buy to cover their positions. The local company caught up was nickel and cobalt miner GME Resources. Its ticker, GME, is the same as US retailer GameStop. GameStop was one of the shorted stocks affected by the Reddit post, and its share price jumped 130%. Day traders confused the Wall Street and the local GME. The nickel miner rallied 30% in a case of mistaken identity. One of the ongoing battles in corporate Australia is the amount of tax large multinationals pay. Because Australia is high taxing, multinationals find legitimate ways to pay tax in other countries on earnings from Australia. New figures from the tax office show that streaming service Netflix paid less than $500,000 in tax in the 2019 calendar year, according to the Financial Review. That's despite having an estimated 5 million subscribers, charging at least $10 a month. That's the Fear and Greed business headlines for today. There's more in today's full Fear and Greed podcast, as well as an interview with Adam Schwab, co-founder of Luxury Escapes. I'm Sean Aylmer. Enjoy your day.